Good day to one and all. This is Dr. Sivaraman of iknowindices.com. Hope everybody is able to hear me. So I'll be presenting for this week Asian session live market analysis. So on 11th February between 5 and 5:45 GMT. So I'll try to give the derived forecast for this particular week, 11th to 15th February. And also I'll explain to you the market trading technique and the trading strategy as part of this particular understanding of the market. So how exactly we can take trading decisions according to my system, I'll explain. Then you can make use of it as a reference material and try to fine tune your trading strategies. Now there are three components involved with regard to the market analysis. One is the derived forecast, which gives my algorithm based statistically derived forecast that gives certain amount of the market prediction, and I try to use it as a guiding factor, then subsequently use the market reading technique, and that I explained many times. Still I'll explain to you once I finish the expected market moves for this particular week. Then later on our reading can go wrong at any given time as long as we are human. So in order to limit the risk in an unbiased way, we use the stop or the hedging order to limit the risk. In the event if you use the hedging order, I also explain to you how exactly the hedging can be used for either way trading in the market. Now coming to the expected market moves for this particular week. Today 11th of February. Swing and firm up moves are expected during that of the Japanese session, and followed by that swing and slide during that of the European session, and then swing and rise may be seen during that of the US session. So the European session slide or a dip could be taken as the week beginning false move, and once this do that and firm up during that of the US session, it confirms that from this particular week onwards they are expected to make the trending move. And I was expecting them to do the trending move from last week, but only one day of this particular month, that is 1st of February, was falling in the previous week. And then subsequently what happened, only non-farm payroll was released, and only on 7th the BOE and ECB rate decisions were allowed or released. So what happened, when they are spread over to that of 2 weeks, then automatically the traders don't commit in a big way. Then the players also made the swings, and when the traders have taken the predominantly buy positions during the start of the week, the players made some good drop in the case of Euro and firm up move in the case of GBP in order to drop Euro GBP, and then subsequently made some volatile moves, either way volatile moves in the case of USDN and also USD CHF. And the commodity pairs, as I explained to you, they are not making any big upward or the downward move. So they have been consolidating or making swings in them. So ultimately what we understand is this week beginning they are expected to make the false move during the European session, followed by that they are expected to make the nice upward trending move in the market, and then everybody will turn bullish. And in the big end of January and early February, people were become bullish and trying to buy at every dip, and later on that the players are interested more in making profit rather than showing the levels, so they just made the drop more in the case of Euro and rise in the case of GBP as a contrarian move. So as a result, we have seen that Euro GBP has dropped significantly from 87 level to 85 level, and Euro has also dropped, but GBP, which was trading around 1.57 to 56 level, which has gained to 58 level. So this is how they play the trick, and we need to understand, and nothing to do with the fundamentals or the sentiments of that particular country. The country sentiment cannot change second to second, and we have to understand they are all nothing but the market exaggerations. Then After today's brief week beginning false move, they are expected to make the swing and slide move. After the gain during the US session today, they are expected to make a slide tomorrow during the late Japanese session. And then afterwards they are expected to swing and rise during European and US sessions. Then Wednesday they are expected to make one downward stop and continue to rise, because if the long holders continue to hold the position without keeping stop, they just revisit, and people call it as the head and shoulder level and things like that, and then they make one quick downward move and make an extended upward move. And before making the shift in trading zone, you have seen in the case of euro an extended downward stop in last week. So we will not be seeing such moves again, and they are expected to make, they could have given any attribute, but you will see subsequently they are expected to gain the levels in the case of euro as well. GBP is going to lead the rally on the upside, as I explained that it is a sentiment creator. So GBP was trading around 1.56 level, and that was creating a bearish feel, and they used that and just made the drop in the case of euro. And also in the case of USD yen, when euro drops, we can understand it is the USD gaining sentiment. But when GBP drops, it is USD weakening sentiment. So basically they just given different stories and made the drop and made big drop in the case of yen crosses, and then subsequently they accumulated all the positions. Now we will be able to see their intentions revealed from this week onwards. Then on 14th, they are expected to open high and start rising straight away during the European and US sessions. And 15th weekend, a quick rise from the start of the Japanese session, and then swing and quick rise during European session. And US session, they are expected to make one quick dip and then quick rise during for the weekend, and then after the rise again they are expected to make profit booking move. So that is how they are expected to gain the levels. I am expecting euro to go above 1.37 and GBP to about 1.62 level. Let us see how far they are making the moves. It all depends upon the traders taking positions, but still the players will try to trap the predominant of the traders holding positions. So the traders have developed last week the bearish sentiment after the drop, and then in order to get the entry they will wait for the correction, upward correction to, and expecting further fall, and when they take such sell positions, the players are expected to trap them on the upside. So it is like a game. They try to make the moves in the market, and we follow it differently using fundamentals and technicals. Then next week, 18th to 22nd, swing and quick rise moves are expected, and afterwards the last week of February will come across very volatile moves in the market. Then again in the month of March they are expected to make the upward move, and they are expected to make a long-term upward move in the case of euro GBP as well as USD yen in coming days, and also in the case of USD CHF. So this is with regard to this particular week forecast. So my forecast says that they are expected to make a very quick rise and shift in trading zone, and that could become very visible next week. But this week they are expected to breach the earlier highs and go above the recent highs and go above. Now coming to the day of the market reading, so we note down the initial lows and the highs in the four majors and two commodity pairs around 3:30 GMT, and try to use them as the reference levels, and also see the net changes in the market and try to recognize the types of moves. They do it in sequence in order to understand what could be the type of move they will do in subsequent 1 hour or 2 hours, and accordingly we place ourselves nicely in the market taking positions, and we have a very good understanding the quick moves or false moves in the market. They quickly gain the levels in order to offload their buy positions and quickly drop the level in order to buy back again at a lower level. So they are doing sensible trades, but we try to do the breakout trades looking into that of the levels, and if you book the profit, fine. If you miss the profit, then they will we will feel that we have taken a higher level buy and liquidate it when they make a quick drop. So that is what happens when the traders try the buy and sell trade or a sell and buy trade when the market is sluggish. Then they get trapped. But when they quickly drop the market and stop cutting the new low for more than 30 minutes, then if you try to take a buy, then you will be doing a sensible trade along with them. Then they will rise it. But in a hurry, as soon as you open the trading platform, if you try to take a position, then invariably we get confused. And when they make a drop, the market fear grips. So nobody is telling us to take the position wherever you want. But ultimately we take the decision. How we take the decision? Because we have the urge to do trade. So we have got several type of urges, like smoking, etc. So this is one such urge. Once you become addicted to that, when the market is, as soon as you open the trading platform, you just do some analysis and get convinced, okay, I'll take a buy here. Then keep some stop. When they are not showing profit and go against you, then you decide whether to hold the stop or remove the stop or lower it or remove and keep it back, because we fail to accept the loss when it is small, and we maximize the loss by just not keeping stop and later on blame the market. So ultimately, whom to be blamed? The trader has to be blamed, because he has taken the position just like that out of that urge to trade. So my humble request is just calmly watch the market when they are making sluggish moves, and whenever they come closer to low and for 30 minutes they don't breach the low, then you try to take the buy position. In case if they breach it, find out what move they are doing, whether it is a stop and on the downside, and then later on in 30 minutes they go above that of the initial low, then you try to take in a small dip and sustain above that of the initial low for more than 30 minutes. You take a buy, definitely you will be able to see the profit. And if they in case cut the low and stay below there for more than 30 minutes, wait for 2 hours, see whether they are cutting the new low. They don't cut the new low, then take a buy position near the new low, you will be able to see profit. And in case if they cut the new low after 2 hours, understand that they are making intentional move on the downside. Don't take any position, don't sell after the drop. You just wait for them to complete that particular intentional move on the downside for 2 sessions and start up the 3rd session. Then try to take a buy. But still, we need to use the trading strategy of keeping a hedging order or a stop 30 pips, so that if it is filled, it could be an affordable loss. And instead, when the loss is small, if you try to avoid accepting it, then it becomes big, and you find that there could be a margin call and things like that. Really get confused. So market reading is one aspect. And all the market readers may not be good traders. You might be aware of it. So a trading strategy is based on the quick decision making ability. The quick decision making ability will be able to give you an insight about the market. Once you understand the market in a right perception, then you will find that you cannot be cheated. So ultimately, you don't look into the market as a surprise. Instead, you envisage they can either drop the market or rise the market. What are the prospects? Whether they can drop the market or rise the market. Then accordingly commit a position. During such quick moves, then market fear will not make you to do distress trades. But instead, you become addicted to trading and take a position, and later on when the market moves, ask so many experts and ask in the chat, what can I do? I am holding long, I am holding short, can I cut it? And if somebody says that cut it, why you want me to cut it? All those explanations are given by the time the market would have moved differently. So ultimately, when you look for somebody to take a decision on your behalf, how it will be appropriate? See, you should hold responsibility for your trade, and you should be in a position to take appropriate decision. You can take ideas from various people, but ultimately a professional will be able to take his own decisions, and he will not go by others' decisions. Others' views he may just look into, and there is no guarantee or no need that it has to be followed, because others' view might be a generalized view. You won't be knowing how much equity you are holding it, how much of drawdown has happened already. So others won't be knowing what is your trade. And in such a scenario, if somebody advises you and if you blindly do that and later on yell at him, that shows the weakness. You are not able to trust yourself. Instead, you wanted to trust somebody, and subsequently when you find that the person is not trustworthy, then immediately you try to look for someone else, but fail to trust yourself. If you fail to trust yourself, you will not be able to trust anybody in this world. So it is something like a self-confidence. So unless and otherwise you build self-confidence, you will not be able to tackle issues. So for that, we expect the unexpected and use the trading strategy. So we know, okay, there is definitely a chance for euro to go up, so we'll take a buy. Then when euro goes up, immediately we keep stop at entry and remove the stop. In the event if it start making loss for more than 30 minutes, then keep the hedging order or just simply close the position if it is making loss for 2 hours and then relook at the market. These are all the fine-tuning way of trading. And so our reading may be right, but our equity is very small. When they make a small dip of 20-30 pips, also our equity will erode, which can act as a trigger for our emotions. So avoid such things. Ultimately, what is the main trigger more than that of the market moves? The equity erosion is the main trigger for the traders to become panic and restless. So if we take very less position, the equity will not erode. And you may ask the question, I'll be making only a small profit when I take a mini lot. But see, a person can do business according to the investment. And if I want to make an investment of 5,000 and earn 10,000, in any business, is it possible? Unless and otherwise it is gambling and luck. So we cannot depend on the luck every time. An educated person will not look into that of luck. So one need to understand that luck may favor a few occasions, but not always. And that cannot be the strategy for trading. That means, you depend on luck rather than depending on yourself. So please understand that self-analysis is most important in trading decisions. And we should be able to understand with the common logistics, okay, when it is near the low, I'll try to take a buy. When it is near the high, I will try to take a sell. Otherwise, I'm afraid of doing sell and buy trade. Wait for a good opportunity of drop, then I'll try to do it. If you have a mindset of that nature, because the players cannot do short selling, and they have to accumulate the positions, only then they can just gain the market levels and book profit. So why you enter into short selling? You just wait for the market to drop, then afterwards once it consolidates, stop cutting the new low or low for more than 30 minutes. During the early or the late sessions, you try to take a buy position, you will be able to definitely see profit. Why not you build up your equity by booking 30-40 pips session wise or on a daily basis? In the long run, you will be able to understand. When you go for a job, they don't pay you in 100K or 200K like that. Only in a year you get the income of that nature. So when you go for a job, you are getting about $5,000 or 6,000, 7,000, depends upon the profession. So when the hard work can only earn that much, how can the luck and the quick work can earn much more than that? So we imagine simply that out of luck or out of our quick-wittedness we will be able to earn, but that is not possible and it cannot be sustained. You might earn in one occasion and you tend to develop certain strategies of not keeping stop and things like that. The players know very well when they make about 200 pips drop, you just liquidate everything, lose everything, come back to the same level. What is the big idea of doing it? You only become addicted to trading, you weaken your mindset, and you are not in a position to become a reliable trader. for yourself to sustain and earn consistently money from the market. So the trader psychology is very important, and we need to understand how exactly we can earn money from the market in a small way. Because our equity is small, so we can only earn in a small way. We cannot simply imagine that I'll earn $10,000 keeping $100. It is next impossible in this world. If that is the case, nobody will go for a job. Everybody will be doing this trade if it is so easy. Coming to that of the market reading. So the initial lows and the highs. The low 1.3363 is intact, 1.3378 is also not breached, and GBP 57.86 and 58.08 not breached, and Yen 92.36 and 92.75 are not breached. USD CHF 81.69. So they just breached 91.69 has become the new low, and 91.84 was the initial. 91.69 is the low and 91.84 is the high. They are not breached. And Canadian dollar 1.0027 is the low, 1.0045 is the high, but they just breached the high by 4 pips and formed 1.0049. And net change is also positive, but the spread between the low and the high is just less than 40 pips in most of the currencies. So in the case of Australian dollar, they just breached the low, initial low 1.0300 was the initial low, and subsequently they breached and formed 1.0292 and staying below there. So 30 pips negative net change is seen in the case of Australian dollar, and so Canadian dollar is showing the USD gaining move along with that of Australian dollar. So the commodity pairs are showing USD gaining move, but in the case of majors, Euro is showing USD weakening move by gaining 6 pips. USD Yen is showing USD weakening move by showing 9 pips negative net change, but GBP is showing USD gaining move, and USD CHF is showing USD gaining move. So we find that these two are showing USD weakening move and these two are showing USD gaining move, and the commodity pairs are showing USD gaining move. So that means they are making mixed moves but not breach the high or the low in majors, but only in the case of commodity pairs in order to handle the commodity crosses. After handling the commodity crosses, they will come to that of the majors from that of the European session. So they are likely to do that downward stop, and because when they are consolidating between the high and the low, no trading opportunity. We can hardly earn about 15 pips. Next impossible, because the spread is there between the bid and the ask. So they have to necessarily breach the low and the high. So when they breach the low and stop cutting the new low, and when it is quick drop below that of the initial low, and see that they stop cutting the low and take a buy position, we will be able to see that they rise. But still we cannot afford to take chance. Even though we had done the market trading, keep the hedging or the stop 30 pips or 20 pips, whichever is convenient to you, and more than 23 pips, less likely that they will hit the stop if it is a stop point. That is why I recommend 30 pips. So once your position makes profit, keep stop at entry, remove the hedging order so that you don't incur any loss. Then subsequently trail the stop, maintaining 15 pips away from that of the market, so that when they gain the levels, you can sustain and maximize the profit. See, earning profit is one thing, maximizing the profit in the same trade is another thing. That is more important in a professional approach. So if you simply see a big loss and afterwards the market recovers and you just close it with no profit, no loss, or close it with about 5 pips profit, that they are all nothing but out of fear you try to do that. Instead, once a position makes profit, keep stop at entry so that there is no fear, you will not incur any loss. Your usable margin or the equity will not erode. Then subsequently, if you maximize the profit in a single trade, if you try to maximize every time the profit, you will be able to see with less stress, you will be able to earn more. Because in the process of earning, if you stress yourself too much, then your longevity will come down and you will really undergo stress and find that you are not here to enjoy the fruit of your trading. So during the Japanese session, swing and firm up moves are expected, and swing and slide moves are expected during that of the European session as a weak beginning false move. Then swing and rise move is expected during that of the US session. So it might be mostly sideways move, not a big drop in any of the currency pairs. So look for them to come closer to low during the early or the late sessions and then commit positions. And contrarian moves, they are doing it from that of the last year. They have been consistently doing contrarian moves in order to attract the traders to enter into that of the crosses, because previously in 2008-9 they have been focusing more on the majors, and then when the traders have lost money and they just enter into that of the crosses, then now they are manipulating the crosses by making contrarian move and inducing the traders to enter there. But be careful, the crosses, the spread is high between the bid and the ask, and also the volatility is also very high. You should be able to sustain it by taking appropriate decisions. Okay, now there are questions here. I'll answer to the question. Okay, B-man, can the slide be defined in pips? I have given it in my trading system webinar. About less than 30 pips is a slide. They just make a small dip, and also they do it pip by pip. That is called a slide. And drop is they make quick change of the levels for about 15-25 pips, or sometimes 35-40 pips in one go, and you will find a very big candle formation, red candle. Similarly, they can rise also the same way during the data release time, and then subsequently they do it 3 times and then reverse it. You have to understand that. So that is the difference between the slide and the drop. Slide pip by pip, they come down, whereas the drop, they make a quick move on the downside in fraction of a second. And similarly, quick rise is an upward move or a spike for about 20-30 pips in one go, and firming up is about 15-25 pips, and rise is about 50-60 pips. Slowly they will do it. Spike is the only one opposite to that of the drop. Then Srinivasan, do you think Euro USD for the drop down to 32, or will it be above 36? I'm expecting it to go above 1.37 in this particular week as per my algorithm and also my market reading. So let us see how exactly they take it. Keep our mind open, and we just get the information from that other forecast. Okay, it is expected to go up, fine. And don't immediately change the view, and read the market by using the market reading technique. Okay, that means when the traders are predominantly long, they have to make one downward stop and before making a rise. And also before making a rise, it should be a meaningful rise. They want the traders to sell. Only then, if they rise, the traders will come for short covering. No? So they have got a purpose for every move. But we think that based on the data release, based on the economic condition, the market is moving. It is not like that. They want the traders to commit wrongly. Only then they make big moves on the upside or on the downside. Otherwise, on a daily basis, they will try to make an upward stop and above that of the initial high, a downward stop and below that of the initial low, and just make a wide range swings for that. Then we call it as a consolidation. That means not many traders are committing positions. Okay, Sundaram. The initial low and the high set during Japanese session is valid till next day after US session? No. It is valid till end of US session. The next day, the session starts around 0030 GMT, and then the interbank treasury said the session start low and high. Then the players breach the high and the low around 3:30. And they got a purpose for it. No, I cannot disclose this in an open forum. They got a purpose, and then they try to set the high, initial high and the low around 3:30 GMT, depending upon the building up the volume for that particular day. See, the initial high and the lows are not used by me. They use it. So I am just disclosing it here. That's all. Then Kadaik. They have already dropped euro on Thursday and Friday. Is it possible that they will make a stop and again? See, you have to understand one thing. Some traders would have closed the long positions, and there are some traders, they will be holding the long position and try to do the averaging every 50 pips or 60 pips drop and try to take it. And they will get the insider information whether predominant of the traders are long or they're short. Depending upon that, they make a decisive move on the downside. Anybody can wonder, okay, why they are weakening euro so much, and it is a very attractive level to buy. They took it down to 1.20. But at that time, the talk in the market was so bearish and nobody was willing to take a buy. And if they know that it will go to 1.33, 1.37, definitely everybody would have grabbed it. That is forecast. But people think that forecast means it's just 1 hour what is going to happen and things like that. So I cannot help it. Then B-man. Why is that 40 pips spread? As read in the live market code page so important? Is it indication of volatility? No. If it is less than 40-50 pips, that means they are expected to make a swing. The traders have not committed positions. If the traders are not committed much positions, there is no point in making an upward stop or a downward stop. Why they should make it? Tell me. By making an upward stop, they are not going to earn. By making a downward stop, they are not going to earn. Then many of the occasions, like say for example Friday non-farm payroll, and the traders from the Japanese session onwards, they don't take positions at all. So they make only small swings for 15, 20 pips or 25 pips and things like that. But very close to that of the data release time, they create the anxiety to that of the traders. What going to happen in next 30 minutes, 20 minutes, 10 minutes, 5 minutes, 1 minute? Then countdown starts and the bell ring, and then subsequently you find the traders look for the moves. When all the traders are looking for quick moves, who is making such quick moves? Simply we say that the big players are the institutions and things like that. Only the manipulators make such big moves to create the sentiment, and later on you find that they act against all depending upon the commitments of the positions. It is an earning game. In the earning game, they only try to trap the traders and earn. So as a smart trader, what you can do, we trade along with them. When they drop and buy, okay. After the drop, okay. They are not giving any more profit booking opportunity for the short sellers without breaching the new low, okay. They have started accumulating. Once they start accumulating, absorbing all the shorts, they will not give profit booking opportunity. If they give profit booking opportunity to the short sellers, you will not come for short covering on the upside. It is a simple logic. Then they rise the market and induce the traders to do the short covering. At the time you buy, you will be able to see a definite profit. So instead of being an addict to trade and try to take positions and praying to God that it has to go up or come down and things like that, you look for quick moves. Be an opportunistic trader. We look for quick moves in the market, then you commit a position and then you will be able to get a substantial profit. Some may think that let me do scalp and earn about 10-15 pips every time, but it will be very stressful and tiresome, and you will invariably miss the large moves. Instead, just ignore the small moves, look for large moves and enter into the market as an opportunistic trader. You will be able to see in one go, just for about half an hour, I earned about 100 pips. Okay, that is the end of the day. Let me just go and attend other work, and later on tomorrow I will look for another opportunity. That will be the better perception of trading in the market. As long as the traders become addicted to trading and continue to hold the positions, the players are going to continue the game. Jan Sundram. Is the 30 minutes rule of breaching or not application to out of the sessions? Yeah, within the sessions, including the mid sessions. Once they do the downward stop and below that of the initial low, in the case of Euro or GBP, invariably they do it during the early or the late sessions, and mid sessions in one or two currencies sometimes they do it, but not all the currencies. In order to make a downward or an upward stop and pushing down or pushing up, they do it in crosses. At that time they may breach high or low in Euro or in GBP, just to push Euro GBP on the downside or make one downward stop and before making a rise like that. You know how Euro GBP was rising about 87 area, from there they had dropped it. And Euro CHF, they took it to 25 area and then dropped it to 22. Again they are expected to gain the levels. And week beginning false move, Euro GBP, they will form up around 85.20 and then start making a drop again. In the case of Euro Yen and GBP Yen, they just made a substantial rise and then booked profit all the way and induced the traders to liquidate the long and turn short. Now they are absorbing everything, and you find nominal net changes to push it upward. And you know that Friday is a good day for them, because most of the traders, they do not want to hold the position in an uncertain condition for the weekend. So they know very well. And also those who are trading through using the bank, they have to pay the margins, so for additional positions, so they are forced to liquidate the positions. So they know very well the compulsions associated with trading. And similarly, overnight interest, people are afraid. So they try to capitalize all those things and try to bring in margin call and make big moves when the volume becomes very thin, and make decisive stop-ins and earn money. It is like isolating yourself, taking to a corner and mug you. It's very similar to that. Okay, no more questions? So let me just refresh. So we use the derived forecast and we use the market reading and the trading strategy collectively and try to earn from the market. And we try to become an opportunity trader, and we have the mindset that market continues to give trading opportunities. So we will look for a better opportunity to enter into the market. Then you will be a wise trader, and we will be able to, in a wise way, earn money from that other market. The expected market move, week beginning false move, they are expected to make a drop during the late European session, and then reverse the market. Then Monday, Tuesday they are expected to rise. Again Wednesday they will just induce the long holders to liquidate before making further rise. And then if you keep stop at entry on today, during the European session, taking a buy and keep stop at entry, and if it is not stopped out during Wednesday stop out, you can do a position trade, close it by Friday European session. US session they are expected to make profit booking move. The next week again they are expected to take up the market to the higher levels. And you know that when Euro was around 1.20, 1.25, I was telling everyone that buy. Everybody was telling one day Euro has to go rise, and so you are just simply telling every day buy. So one day it has to rise, so you will be able to make profit. But at the moment what is going to happen, that is what many people commented. Now they will be able to understand how the long term and the short term calls are more important rather than doing impulsive analysis on the market. So I take this opportunity, no more questions, so I take this opportunity to thank FX Trade for the facilities and the generosity in asking me to present the webinars. And I am thankful to you people who have attended this webinar and just trying to learn and develop a market insight. And without expecting any reward, I want the traders to become sensible traders, meaningful traders, so that they will be able to earn money from that other market. So I'll come again on February 18th, because Thursday I'm supposed to give a review of this particular forecast. I got some other work on that day, unfortunately. So I'll be coming back on 18th February and try to give yet another forecast for the next week. And use it as a guiding factor and do your own analysis, develop your ability to read the market, and you can really conquer the market. Thank you one and all. See you next week.